Hi everyone, we are Team Bro Girls. We are going to present on question number 4. As an introduction, Islamic wealth management is a discipline that aims to provide comprehensive solution to clients via Sharia-compliant products and services in a wealth management cycle. Sharia defines 5 necessities as the fundamentals of human existence, namely faith, self, posterity, intellect and wealth. Thus, it is the responsibility of every society to preserve and protect these fundamentals. These Sharia fundamentals serve as the foundation for the development of Islamic financial products. There are 5 wealth management processes, which are wealth accumulation, wealth generation, wealth preservation, wealth purification, and wealth distribution. Wealth accumulation. The enhancement of wealth by generating returns via Islamic investments and instruments such as Islamic equities, sukuk or Islamic bonds, as well as Islamic funds. The investment vehicles must comply with the Sharia law, in which the vehicle must avoid any investment that involves gambling, interest earning, or if the purpose of the said investment vehicles is unclear. The investment must also avoid any businesses that are involved in pork and liquor, be it manufacturing, transporting, packaging, or selling. Islamic finance is based on Islamic principles and jurisprudence. The payment and receipt of interest or riba is prohibited under Islamic principles. Contracts that involve speculation, such as mercy and uncertain gharar, are considered void in Islamic finance. Financing instruments in Islamic finance consist of equity-like and debt-like instruments. Fixed claim instruments include murabaha, ijarah, salam, and istighna. Sukuk is an asset-backed trust certificate or bond representing ownership of an asset or its usufruct or earnings based on the principle of Sharia. Equity instruments include mudarabah and musyarakah. In mudarabah, one partner provides the capital investment or rabbul mal to another partner, mudarib, who is responsible for operations and management of the business. Musyarakah is a profit and loss sharing partnership contract. The payment and receipt of interest or riba is prohibited under Islamic principles. Contracts that involve speculation or maisir and uncertainty, gharar, are considered void in Islamic finance. Example of wealth accumulation. First is gold. Gold has a significant history in the Muslim world as well as other cultures throughout the globe. Gold is seen as one of the most valuable and desired forms of metal. Gold has significance, especially during times of economic crisis or stress. The next one is unit trust. A unit trust fund is defined as a pool of funds gathered from a group of investors and is invested into various assets in order to meet the unit trust objectives by a fund manager. The collection of these investment funds is managed full-time by a professional fund manager. Usually, an investment portfolio consists of equities, bonds, and assets. A unit trust is involved a three-way relationship between the manager, the trustee, and the unit holder. The task of the manager is to manage and the operations of the unit trust fund. The trustee holds all the assets while the unit holder is the investor.
As individuals, seeking wealth in a proper way is considered an act of worship. The source of income or wealth should be earned and multiplied in an Islamically permissible way, which means income and capital acquisition must not be generated from prohibited business activities. The products and activities are entirely free from riba and largely free from gara and maisir. Moreover, the investing must not involve haram products such as pork and alcohol. As for riba, it is clearly prohibited as mentioned in Al-Quran, Surah Al-Imran, verse 130-2. O believers, take not double and redouble interest, and fear God so that you may prosper. Fear the fire which has been prepared for those who reject faith, and obey God and the Prophet so that you may receive mercy. Wealth generation involves a decision on how we create and generate more wealth. Investment involves risk-taking activities by individuals with the expectation for a positive return in the future. There are various types of risk which consist of interest rate risk, market risk, liquidity risk, currency risk, inflation risk, financial risk, Sharia non-compliance, and business risk. As an example, in terms of market risk, it is the risk that the value of investment will decrease due to changes in market factors. These factors will have an impact on the overall performance on the financial markets and can only be reduced by diversification into assets and that are not correlated with the market, such as certain alternative asset classes. For individuals, there are various types of investment activities in order to increase asset value, which the ultimate aim is to achieve a positive income and to preserve or increase its value. Among types of investment are investment in saving account, investment in fixed deposit, investment in shares, investment in bonds, investment in properties, and also investment in funds. We take for one example, investment in tabung haji. This type of saving investment. Tabung haji saving account previously was based on the wakalah concept, which means an act of the one person or recognized as mawakil appointing another party recognized as wakil as one representative to handle one affairs. However, on December 31st, 2019, the wakalah concept was replaced by wadiyah yad damana saving contracts. In this concept, banks accept deposit from customers looking for a safe custody of their funds, and at the same time, the customer are able to withdraw their money at any amount at any time. These accounts let customers set aside a portion of their liquid asset while earning a monetary return. It is Sharia compliance and all savings are guaranteed by the Malaysian government. Based on record, from years 2006 until year 2018, Tabung Haji managed to give the hibah at average not less than 5%. Therefore, it is good saving for individuals to keep money in order to increase their wealth. The advantages for individuals invested or saved in Tabung Haji investment is in terms of zakat. Zakat for the saving account is paid by Tabung Haji and can be deducted for a tax payment. Tabung Haji, as mentioned earlier, also has a competitive dividend if compared to other Islamic bank saving accounts. Among other advantages of saving in Tabung Haji are the deposit and individual are 100% guaranteed by the government as per the Hajj Act 1995. Through this saving account, it will also provide a safe place to store the money, since this saving account also provide PIDM insurance and at the same time allows individuals to earn profit. However, saving accounts also have several disadvantages since it provides low returns, or sometimes it can be negligible if compared to other investment products such as a unit trust and stock. It also can cause trouble for individuals to withdraw the money. Last but not least, for ATM card service, there is a charge of RM8 annual fees for all banks in Malaysia.
To preserve wealth, one may consider to purchase an insurance policy or participating in a takaful program to mitigate the risk they are facing with their wealth, also in order to protect their dependent from any hard circumstances. For a Muslim, it is compulsory for them to participate in a takaful program because looking for a halal alternative is a must. So what is a takaful? It is a mutual aid or indemnification agreement. The takaful contract ensures unity in the event of a human disaster or a loss of business or property. Takaful literally translates to joint guaranteed, share obligation, shared guaranteed, collective assurance, and mutual undertaking, all of which refer to a mutually beneficial partnership and agreement among members of community. So how does a takaful work? Instead of paying premiums, all investors, which is the policyholders, agree to guarantee each other and contribute to a mutual fund or pool. The takaful fund is made up of all the donations that have been raised. The amount of money each individual contributes is determined by the type of insurance they need and their personal circumstances. The policy, which is the takaful contract, outlines the extent of the risk and the length of coverage, much like the conventional insurance. A takaful operator manage and administer the takaful fund on behalf of the participants, charging a fee to cover costs. Sales and marketing, underwriting, and claim processing are also included in these expenses. Any claims made by participants are paid out of the takaful fund, and any remaining surpluses, after making allowances for the possible expense of future claims and other reserve, belong to the takaful fund participants, not the takaful operator, and may be allocated to them in the form of a cash, dividends, or distribution or reduced future contributions. Some difference between takaful and conventional insurance is takaful is specifically intended to promote Islamic brotherhood among participants who have agreed to bear each other's stated losses, such as death. Takaful emphasizes the importance of brotherhood and unity among its members. In the takaful system, self-interest driven by material gain has no position. There are two types of takaful products offered in the market. The first one is general takaful, which comprises of personal accident, home, and motor takaful. The second one is family takaful, which are family, child education, investment link, medical, and health takaful. Some benefits of takaful are individual would be relief of financial burdens because reimbursement will be obtained or accrued liabilities will be compensated in the event of an untimely death or complete impairment. It also allows dependents to take possession of inherited property. Also, participants are entitled to a share of the profit or surplus of operation based on the al-mudarabah profit sharing concept. Some rules of takaful in wealth planning are, in the case of an unfavorable event such as sickness, injury, or death, takaful compensate people for insured or covered damages. At the same time, it can benefit individuals and society as a whole by providing investment capital, lending money, and reducing anxiety. Most individuals in the wealth planning and management industry have insurance or takaful in one form or another as a wealth planning tool against loss of income and a means of safeguarding properties. In short, when one dies, life insurance and takaful will provide funds to a surviving spouse, children, and other dependents to help sustain their standard of living, repay debt, and finance education. That is how wealth preservation takes place by engaging in takaful. Islam encourages people to look for wealth and also look for ways to preserve it for the sake of better life and care for their dependent.
Now let's go to the wealth purification. Wealth purification is a process of cleaning of purifying wealth from illegal income that may have unknown earning. Purification can see in the form of giving the portion of wealth sincerely as charity. The objective of purification is to comply with God's command to refrain from wrongful means of earning wealth to fulfill obligation of a normal person wanting to accumulate permissible wealth. The process that cleaning and purifying wealth can be done by paying zakat. By paying zakat, it will be paid by a certain percentage of a Muslim salary or income to an authorized zakat institution like Lembaga Zakat Selangor through the representative like Amil, or distribution to the other people that really need Muslim as specified by the Sharia. It is mandatory to all Muslims, and this purification cannot be found in the conventional personal financing planning. There is several types of people that can receive zakat. The first one is fakir. Fakir is a Muslim that have no property or source of income, or any property or income, but did not reach 50% to meet the basic needs of themselves. Second type of people is poor. it is a Muslim that has the property and income that cover more than 50% but did not reach 100% to meet the basic needs of themselves. Third is Amel, which is a person or organization that responsible for carrying out the work of collection and distribution of zakat affair. The next one is Mu'allaf, which is a converted Muslim but still in low and weak faith to Islam. Fifth is Riqab. It is a Muslim who freed from the clutches of slaves and subjugation from both aspects, physical and mental. Next type is Harimin. It is person in debt that meet the basic needs for the benefit of themselves, their families, and dependent or people who need instant solution justified by Islam law. Fisabilillah is one of the type of people where they involve with an activity for vertical, maintain, and propagate Islamic religion and ritual. The last one is Ibn Sabil, which is wayfarer, where any person traveling for the purpose approved by the Sharia law of any country or any country that needs help. People who are non-Muslim, rich people, and the dependent of those who give zakat are the people that cannot receive zakat. By giving zakat, we can see the impact to the individual, not only to purify their wealth, but also to teach the rich to feel responsible to the poor. Furthermore, it also reminds that wealth is coming from Allah, and at the same time, it cleans the soul from selfishness and greed, as well from being self-centered. Zakat has taught Muslims to have the best qualities that are generosity, love, and concern for all with kindness. There is three terminologies in zakat. The first one is haul, which means anniversary, and it means that zakat becomes due if the owner has owned the wealth for 12 lunar months. Another terminology is nisab, which is an amount that Muslims need to have before being obliged to zakat. If it less than the minimum amount, it means that zakat is not obligatory, which is compulsory. For example, in Malaysia, the nisab of gold is 85 grams, which total cost is 13,600. If the sum of the deposit one has in the bank is less than this amount, then it is not compulsory to pay zakat. The third terminology is milkut tam, which means full or complete ownership. In other words, it means that we have full control of the wealth and can use and benefit from it. Zakat can be separated into two categories, which is zakatul fitr and zakatul mal. Zakatul fitr is obligatory on every Muslim except the poor, and it has to be paid by the end of the Ramadan. Zakatul mal is a zakat based on individual wealth. There are types of wealth which come under zakat law, like gold and silver, which is either stock or pure mineral, stock in trade, livestock like camel, cow and sheep, cereal or agricultural, and lastly fruit like dried grapes. Besides zakat, wakaf is also another instrument in Islam in order to purify wealth. It's another aspect of wealth purification.
Wealth distribution. In Islamic wealth management, wealth distribution can be done by transferring to someone using the common practices or method such as hibah, wakaf, bequest, or inheritance. However, this method has issues such as any hibah that transferred to another person will disrupt the interest of the giver. Hibah also might have tied to rules of fara'id. Wakaf will have problem if the properties don't meet any legal or regulatory framework. Wealth distribution need to be planned ahead in case of owner wants to give out his wealth to other than his family members before it falls under fara'id. The asset of all wealth will only be distributed after the owner passes away and will be overseen by agents. The agencies that will take care of wealth distribution are Syariah Court, Amanah Raya Berhad, or wealth management firm. During lifetime, the owner can distribute his or her wealth using methods such as hibah, hidayah, sadaqah, wakaf, trust, or nazar. The amount he can allocate is unlimited and he can distribute it as he please. However, after his or her death, the wealth distribution will go from hibah, hidayah, wakaf, trust, and wasiyah, wajibah. The amount will be up to 1/3 of the total. The rest of the wealth will be distributed using faraid. When the wealth owner passes away, the wealth asset that is going to be distributed first will be the harta pencarian. After that, wasiyah, and finally the balance of estate, which will be distributed according to faraid law and follow the deed of family arrangement. There are three methods of wealth distribution, which is hibah, wasiyah, and faraid. Hibah is giving one wealth to others without expecting any replacement or exchange, with the transferring effect on the ownership during lifetime or execute upon death, applicable either to family members or legal heir, or members who are not entitled to inheritance. Hibah can be used during lifetime for execution upon death. Wasiyah basically means giving a gift to others in terms of wealth, debt, beneficence of one's property after his death. However, not for legal heir, and allowed at maximum of 1/3 of total asset. Faraid is a distribution of estate after one's death according to Quran. Guidelines of estate distribution can be referred in the verses 12 and 176 Surah An-Nisa. That's all for me. Thank you very much.